Welcome to Don't Waste the Chaos. I'm your host, Kerri Roberts. If this is your first time tuning in, welcome. I hope you're ready for some nitty-gritty info when it comes to building a strong, sustainable business. And if you've been here before, thanks a ton for coming back. My goal is to bring you value week after week. And fun fact, we launch these episodes every single Tuesday morning. Some are solo, some are interviews. All they're focused on small to mid-sized businesses, specifically niched on human resources, effectiveness, operations, sales, and finance. As a previous COO and CHRO myself, I care deeply about these items and know they are the keys to success. I'm excited to bring on board an expert in the area of finance today. Rebecca Knipp is a CPA and the owner of Optimized CFO and Controller Services. She received her combined bachelor's and master's degrees in accountancy from the University of Missouri-Columbia. After spending more than a decade in the tax department at a local public accounting firm, Rebecca founded Optimized CFO in 2019, making the jump from corporate world to entrepreneurship, which you know I did as well. Starting out as a solopreneur and consultant working out of the basement of her home, and then she has grown Optimized CFO to a team of 7 and now has a great office space located right in Columbia, Missouri. She excels at explaining financial information to non-financial people, helping businesses and nonprofits alike to optimize their finances and accounting. And I can vouch for this as I am a client of Rebecca's both in my personal life and with my businesses. Rebecca is an active member of the Columbia Metro Rotary and serves there as the treasurer. She's also a member of the Missouri United Methodist Church, serving on the finance committee. She and her husband, Jason, have one daughter, Grace, and they enjoy spending time at the Lake of the Ozarks, cheering on the Mizzou Tigers. She likes doing yoga and loves to read. I especially love having other boss babes on the pod. So Rebecca, thanks so much for joining me. Let's hop right in and give the listeners what they came here for today. So let's start by talking about the key differences between corporate life and entrepreneurship. How can a business person effectively transition between the two?
Yes, thank you for having me, Kerri. I'm really excited to be here. So I think one of the big things is in a corporate world, you oftentimes go in and you do your job. So you go in and you do the job you've been trained to do, and then you go home. But I think, in entrepreneurship, oftentimes you have to wear many different hats. So not only are you doing the assigned job, maybe that you've been trained to do. So in my life, it was, I was trained to be an accountant. So not only am I doing accounting work, but I'm also wearing other hats as part of being an entrepreneur. So and that may be including like figuring out what's going on with, how to handle your IT needs or how to do marketing, how to price things. So it's not just going in and doing what you were trained to do. It's figuring out, what, as it comes at you, what kind of, not that I have to be master of all trades, but I have to address those needs of the business that are coming down the pipe. So in my mind, like entrepreneurship is truly a roller coaster ride. There's going to be highs and lows. I feel like a corporate job is maybe a little bit more steady with, expectations of like what your day is going to be like. And I just think people, like if they're considering making the jump from a corporate job to entrepreneurship, just be aware of that. If you're the type of person that prefers that steady, consistent, routine, corporate life may be actually a better suit for you because entrepreneurship is not that way. Every day is different. Like there's going to be a lot of highs and lows and just figuring things out and problem solving. I think that's a big thing too, is being able to solve problems that are maybe not even in your normal part of your normal assigned job. So going back to, what are you trained and what is your job? Like, you don't know what those problems are going to be that you have to address. So I mentioned, IT, figuring out IT solutions, figuring out like what kind of office space, how am I going to grow this? How am I going to price things? How am I going to go get new clients? Like all of that is stuff that I wasn't necessarily trained to do, but I still have to address those types of issues like with being an entrepreneur. So a lot of times you're having to think of, figure things out, think outside the box, and it may not be in an area that you've ever dealt with before. So
yeah, and you mentioned it's like being on a roller coaster, but I know your business has been kind of like a rocket ship. It's been up and to the right in a lot of ways. And so yeah, it's like all of those issues, but then exacerbate it because you've had a great client base kind of follow you and find you. So kudos to you, but I know that makes it a little more wild.
Right.
So what are some of the common financial pitfalls that you see in small businesses that they often encounter, and how can those be avoided or mitigated?
So I think one of the top ones that comes to my mind is self-employment tax. So when you have a W-2 job, like when you go in and you're an employee somewhere, oftentimes most of your taxes are going to be covered by your withholding on your wages. So you don't normally have to think about, paying in estimates, like everything's kind of handled by your employer. And when you start a business, oftentimes like there are components that would have previously been covered by your W-2 withholding that you're now responsible for. So a lot of times, like especially for new entrepreneurs, I think they have kind of a shock that first year of, oh my gosh, I didn't know, I have a huge tax bill. And it's most of the time it's because they're facing, not only like income tax, but they're facing like the Social Security and Medicare equivalents, which we kind of collectively refer to that as self-employment tax. So I think just hopefully like if they can, if you're an entrepreneur, you're considering like just be aware of that and like finding a good accountant that can help project for you like what those are going to be, just so you're not shocked, goes a long way. Being able to plan and not, in April suddenly have this huge tax bill. So and maybe that's because of the area that I'm in is accounting, but that is one area that I think a lot of times like new entrepreneurs kind of have a shell shock when they get their first tax bill as their business is kind of starting to take off. So just being aware of that. And, I won't get too much into the weeds with like tax law, but there are ways to, even if you don't have to pay the government right away, just being able to plan and set aside, this is approximately what I'm going to owe in April, can go a long way towards adding some comfort to that new entrepreneur. So,
yeah, I agree. I would say I've noticed, since moving to the LLC to my S Corp model and paying myself, and then I've got multiple employees, I watch these emails come through. We've got my finances set up in QuickBooks, and I watch these emails and it's like an IRS payment. I'm like, didn't I already do one of those? I know it's for all my different employees and for myself, but it's been really eye-opening to me, working in corporate for all these years and looking at that as a line on the P&L. I wasn't really recognizing like every single employee and what the implications of those are. So it has been really eye-opening and something that I think people should dig into a little bit more, not necessarily to understand because some of it's complex, but to get a grasp on how that impacts your business overall. And, like you said, having a good partner that can help guide you in that area, but just to know like it's coming and it's dollars and they tend to leak out, or at least it feels like it does.
Yeah. And I think another area too for after businesses have kind of been established is not kind of examining like their retirement planning structure, so even though you're now an entrepreneur and running your own business, like, we really should be thinking about like, unless you want to work until you're 100, like at some point, you're probably going to want to have savings set aside, to be able to retire or do, things on your terms. So that's another area that I see, especially a little bit more established, not the brand new entrepreneurs, but the ones that have been going for a while. When they first start out, a lot of times they don't have the funds to even think about retirement. They're just trying to like get their business up and running. But after they've kind of been established for a couple of years, we probably should start thinking about that because it's easy to forget and not plan ahead. And I'm of the opinion, like, we don't know if like the Social Security system will be like, I'm not going to count on that. So I think everyone should almost be taking a little bit of responsibility for their own, plans for the future. And so just be aware that like, as your business is going to be growing, like different things need to be evaluated. So just because something worked when you were a sole person doesn't mean it's going to work as you add employees, and doesn't mean it's going to work as you keep growing. And just be always aware of like, what can I do to improve different things, and do I need to change what I'm doing? So
yeah, that's a good point. We set that up to celebrate my 1 year with Salt and Light, and that's great advice. So how can entrepreneurs effectively manage cash flow to ensure the sustainability of their startup or their new small business?
So I know it's probably difficult, but even if you're just starting out, trying to put together a rough budget of what you think your income and expenses are going to be in this business. it's really probably, I guess I would almost say more of like a business plan than a true budget per se, because just evaluating like, how's my pricing structure going to work? And like, is this sustainable? Is this scalable to grow and get what I want? When you are working through this exercise, I would recommend being conservative. So use low amounts estimated for income and higher amounts for expenses to kind of give you a little bit of cushion. But you need to almost make sure that you have enough cash saved, because there is usually like cash needs when you start something. So, and I know you've had other podcasts where you talk about, having, a plan for that and not relying on your spouse, not being able to rely on your spouse's job and stuff. But yeah, just really like thinking through, like, is this sustainable? And like, is this a feasible business plan? Like, because I think sometimes people have these ideas and they don't really think through, like, is this going to be able to provide me a living, or is this just kind of a hobby that I need to, do on the side? But, and I think once they've kind of gotten established budgets, I say more of a business plan than a budget. Budgets are kind of hard when you don't have existing historical numbers to go off of. Once you have like a first year under your belt, it's easier to kind of take what you had spent and kind of adjust accordingly. Like you would know, I want to grow top line revenue by a certain percent. I didn't like that provider of whatever it is, if it's, some sort of service or something, and I'm going to go this way. Kind of tweaking what you started with is much easier than just coming at something with no historical information. So initially, if they don't have any actual historical numbers, probably doing more of a higher level business plan, like, am I pricing this accordingly, like with the resources I have to get the outcomes that I need to either live off of, or if it's something that you want to stop your job and go into, or if that's not going to be sustainable or work, like know that, okay, maybe I need to keep my W-2 job and do this on the side until I can kind of make sure that this is sustainable and going to, provide a living for me. So
that's a really good point. I saw some data either yesterday or the day before, and Bank of America has reported that 3.4% of all bank accounts in Bank of America include a side hustle. So include some level of entrepreneurship. And I thought that was really interesting. At 3.4% might seem small, but in the grand scheme of the monies that Bank of America is handling, it's a lot of people who have decided to go this route. And I think we'll continue to see more of those folks go from a side hustle to a full-time hustle if they stick with it. So yeah, that's a really good point. So what are some of the essential financial metrics? I love looking at the data, those essential financial metrics that entrepreneurs should monitor regularly to gauge the health of their business.
Yeah, so this can also depend on what industry that the business is in. For businesses that are selling, actual physical products, looking at gross profit margin is vital, in my opinion. And that's basically going to say, like, for every, if I sell a widget for that, I get $100 for selling one widget and it costs me $20 to purchase it, I have gross profit of $80. And so my gross profit margin would be 80%. So in theory, margins like that are like the gross profit margin, that's a percentage. It can actually help you compare things like at different volumes to know, am I doing what is anticipated? And when I say, like, for businesses that are selling those physical products, a lot of times those margins are kind of levelized or like consistent among different industries. So you can go out there and see, like, in the industry that you're in, what is the normal profit margin for that industry, and how is my business then, what is my profit margin compared to what the industry is? Am I doing better or worse? For businesses that are more service-based, where their time is what they're selling, so like accounting services, or in your case, HR services, even knowing kind of what percentage of labor, because for service-based businesses, a big chunk of their expenses are going to be your labor costs. So percent of labor, like compared to the total sales volume, is also helpful. For all businesses, especially like if they're starting out, you probably heard before, like runway or months of cash, like how much, can I keep going? That can be helpful to know kind of when, if any, are we going to get into trouble from a cash flow standpoint. And also just generally knowing, like, what are your customers, what are your receivables looking like? Like, how long is it taking your customers, how many days AR do you have? Like, how long is it taking them to pay you back for your services? As businesses get a little bit more established, a lot of times I'm a fan, especially if they're cyclical or seasonal, we kind of do this exercise we call it a hybrid, where we have a budget to start with, and then we're kind of comparing like how things are actually resulting versus what our budget is. And it's kind of got an ongoing, idea of, okay, for the rest of the year, for the next 12 months, how is this going to look? And am I ever going to have any problems from a cash flow standpoint? There's nonprofits this happens a lot to them, where they may have a few larger, fundraising events that a big chunk of their income comes from. And so their cash coming in is not steady. So any kind of business like that doesn't have the steady cash, like, to make sure that we aren't going to have a certain month that has a problem. And if we are, then we want to be proactive and plan for it. And maybe we need to get a line of credit or figure out some financing to cover that 1 month that we're going to have a problem. So
yeah, that's good. I just did a strategic planning retreat with my team last week. Actually, no, it was on Monday of this week. And we took a look at January through the end of April's data. And essentially, I've got a goal to more than double what I did last year, since I'm into my second year. And so I was able to share with my team, like, based on my data from January to April top line revenue, if I lost no clients and added no clients, then I would be $3,000 within my annual goal, which is really exciting. But that also helps all the team to know that if a client decides to move on, that has to be replaced. Just point blank, there's no way around it. I have to replace that. And then if we're wanting to have any growth, then we need to add to that. And so that, to me, is really freeing. It helps the team to know exactly where we're going, what the goals are, what business development and client acquisition needs to look like, what retention needs to look like. And so it kind of inspires everybody in every seat, whether it's the marketing person or the project manager or the other consultant or whatever, to say, like, I have to do my piece for us to hit this goal. And so I love forecasting and projecting and helping that, like, motivate the team for the year. So I love all that data. What would you say are the potential risks associated with relying too heavily on external funding or debt financing for a startup? And how can entrepreneurs balance their financing strategies more effectively?
So you definitely don't want to get too over leveraged. So that just means that you've got too much financed with debt financing. One thing I think people forget about, so debt service, when you get a loan, you have to pay back not only the principal, but also the interest with it. So debt service really includes principal and interest components. And that interest expense is a deductible expense, but the principal really isn't an expense, but it's cash out the door. So you're talking that you have, like, cash that's going out the door, but it's not a deductible expense. And just being aware, sometimes people are like, well, that doesn't make sense. Well, you didn't say that when you got the loan, you didn't have income for the loan proceeds. So on the similar, argument, when you pay the loan back, it's not a deductible expense. But I think one big thing is trying to match up the financing terms with what it is that you use the financing for. So, for example, if you have an equipment purchase, that equipment may have like a 5-year life, or it may be like a longer term piece of equipment that you have. Ideally, you would be utilizing midterm financing, like that's approximately, lining up the interest and the terms with the life of the asset. So ideally, if we have a piece of equipment that maybe is going to last 5 years, ideally we would have a loan that's maybe over a 5-year period to kind of line up. I think what happens a lot of times is business owners don't think through that. And so they may have a line of credit with their bank that they've been approved for, and they are using that for buying a piece of equipment. And so when that happens, like a line of credit is more of a shorter term, like over a year, that's meant more to cover those like cyclical times, like where it can be repaid within a year. So when that happens, they're not always getting the best rates or the best terms, and you're not lining up like your financing with what it is that you're getting. So basically being sure that the longer, and same thing with buildings, ideally with a building, you're going to want to have a longer term loan that covers. So now on the flip side of debt financing, is equity. So the downfall of relying too much on like external equity financing for us, especially for a startup, is that you do lose some control over the decision-making process because you now have another owner that has a say in things. So, just be aware, like, be very careful of who all you're letting in as an owner of your business, because the more, hands in the pot, the more, that there may be disagreements on certain decisions or how to take the business a certain direction. And so overall, you lose some of that control if you have, more external investors, equity owners involved. One big thing that sounds dumb, but I see it time and again, is one mistake I see is entrepreneurs is not having developed like a banking relationship, and then they need kind of emergency funding. So when you're in a situation where you aren't like in an emergency need with getting funding, that's the time to actually develop those banking relationships, like have someone so that if you do get into a situation that you need that, like you're not just trying to develop that need. And overall, having solid financial statements is what will help, you make those decisions. That helps with your lending relationships, like with the banker. That also helps with like external, equity owners, that they will want to see that. So having solid financials goes a long way in order to, predict the cash flow that you are going to need to grow your business and, keep those relationships on the up and up, whether that's with a bank or with investors.
Yeah, those are good insights. So what are some of the common mistakes entrepreneurs make when managing their business finances, and how can these mistakes be rectified?
Well, not having those solid financial statements. So a lot of times, and I'm not trying to knock them, but a lot of times like entrepreneurs start out and either their spouse or their friend is just kind of helping them to keep their financials. But as their business grows, the need to have like accurate information that's timely becomes more and more important. And so I think a lot of times they start out because they're just trying to make it work. They don't have a lot of excess cash, so they don't see the value in having those financial statements. But then they'll call, and I view business finances as more of like a pyramid type. So you've got to have like solid financials that are kicking out before you can like do budgeting or before you can do forecasting or anything like that. So, you have to have a solid base work. So a lot of times they'll call and be like, I want a budget, but they haven't, like, their financials need to be like, started from the ground up. So we've got to kind of build the base and then work up from there. And like I said, if you have a strong base, you can go further into like budgeting, forecasting. Like if I do this action, like if I hire this person, what do we think that's going to do to the finances? Or if I buy this piece of machinery, what is that going to do to my finances, and how is that going to impact? So to be able to do those things, we really need to have solid financial statements from the ground level in order to work our way up the pyramid. So,
yeah. And I would say for those listening, though, if you have developed a little mess yourself, don't let that hold you back from reaching out to someone else. No one's going to be surprised at your little mess, because this is the way it starts for so many businesses, almost all of them. And so don't be afraid to let somebody into your mess and get it straightened out. Like, don't wait too long out of your own fear or insecurity or just embarrassment. Like, you were tough enough to start a business. Now be thick-skinned enough to engage with somebody. And I would say, just from my own personal experience, so I launched in April of 23. And my husband and I were like, okay, we're going to do the business finances until we hire either a second 1099 or move 1099 to W-2, or if I have additional revenue streams. And so we're going along for a few months, and it got to be like October, November. And it was like, okay, we're going to need to engage someone else. This is getting too complicated. And instead of continuing to do it ourselves in an overly simplistic way that isn't going to be able to help me forecast or budget or any of that, we were like, let's go ahead and just bite the bullet and make the shift. And it was a game changer for me, being able to move from Excel to QuickBooks and execute payment through there instead of I was literally writing a little paper check out to my 1099. And as an HR person, the appropriate thing to do is categorize her as W-2 as I started to direct the work more instead of letting her make the decisions. And so there's a lot of things that went into it, but I'm glad we didn't wait because things are getting more and more complicated by the day. And honestly, if you want to make a lot of money, they have to get more complicated. You have to have additional revenue streams to have sustainable, successful business. And so that means overcomplication. So it's just better to go ahead and invest in yourself and invest in the business and get that situated. And that's not a plug. It's just the reality. It's my experience that I saw. So speaking of that, we're talking about foundation. So I know we've talked a little bit about this, but if you have anything that you want to expand, what steps can entrepreneurs take to establish that solid financial foundation from the very beginning for their startup?
Well, I'm biased to accounting just because that's the field I'm in, but I think having solid relationships with other providers, like I think all too often small businesses or they think, well, I'm not big enough yet to like hire, an HR person, for example. I'm picking on you, Kerri, but they're like, I'm not big enough yet to have a need. But there is a need in my mind for different types of professional services, even early on. So I'm a fan of even outsourcing those different kinds of arrangements. I actually, giving you a little plug, Kerri, like she has helped my business like with HR, like outsourced type stuff. And it's been great because that's not my expertise, but there's still some things that pop up that it's helpful to have a person that is an expert in that field kind of guide you like what needs to be done. And so, and this can be anything, I think major, professional type services that you're going to need, but even IT services, legal services, advertising and branding, all of that, you've got to have like a solid kind of foundation. And you kind of hit the nail on the head, like that. You in order to grow, you have to get to the point where you're like, I need a person who's an expert in this field. I'm not an expert in this field, but I'm going to need help. And so this goes back to like the problem solving hat of an entrepreneur. Like they may not be the one to do it all, but they're going to have to figure out, okay, what kind of outsource people or team do I need to have in place to ensure that I'm like able to build my business up and grow it. And, again, accounting is my field that I'm in, but we see all too often like that the accounting function is kind of an afterthought. A lot of times small businesses will do their tax return because they have to, and they're giving all of their stuff to their accountant in March of the following year. So there's nothing that they can do to like make decisions or impact what happened last year. So I think being like more proactive and, looking at stuff more regularly throughout the year so that if there are things that need to pivot or change, or even if nothing needs to change, but you want to plan for, okay, what is my tax bill going to kind of look like? That goes a long way in, being able to grow your business, I think. And being able to make those decisions more comfortably than just by the seat of your pants, not knowing what your financials are showing you. So, and that could be true. That I'm telling you this in an accounting standpoint, but that could be true, I think, of any of those kind of areas that I think small businesses might need to outsource or at least like have some kind of plan for, just being proactive and like being ahead of the game, like not waiting until there's a problem, but like investing earlier on in avoiding potential problems. So
yeah, I agree. And really, you were doing the fractional thing before it was cool. I would say a lot of people open their mind up to these services, like when COVID happened and people were wanting to work remotely. And then as RTO or return to work mandates have happened, people have stepped out on their own. But I have been mind blown at how many fractional opportunities there are out there. And when I am advising a client that comes to me, almost every single client I talk to will have some kind of hiring need. And it's like 95% of the time that I'm like, do you want to go fractional first? Like if you feel like you've identified a need, do you want to talk fractional first to fill that need initially? And then we can talk about hiring, but maybe getting the foundation built, because when you're doing it with somebody fractionally, that's a contractor, you still, as the business owner, have so much control over that situation. And maybe you don't want the control. Maybe you want somebody to come in-house and just take it over for you. And that's a different conversation. But there's so many times, especially in small business life cycles, where I'm like, I don't think you're there quite yet. Let's get like the next right step, which would be a fractional person to step in. And then maybe they build a foundation and you've got somebody more entry level that can execute on that role internally. Or maybe they get the foundation built and then you see how much more can be done. And now you're going to hire a full-time person into the role. But either way, it's a more sustainable spend on the line item versus going big or going home. And then from an HR perspective, you recruit and then make sure that you've got them the right employee status. And then you've got to train them and onboard them, integrate them into your culture. And then if they don't work out, now we're talking about progressive disciplinary action, employee performance improvement plans, and then potentially termination. So that life cycle, it's like, would you like to skip all of the HR piece and just bring a contractor on and give this a shot? And there's so many times, especially for small to mid-sized businesses, that I would say that's the next step. If you've identified a need, if you feel a gap, go there first. But yeah, you started doing that before COVID even happened. You were a little ahead of the curve, but it's so cool to watch this happen now with these professional services, because it used to be all IT related, your developers, your designers, marketing and things like that. They were the ones doing fractional work. And now it's just spread across. And I just think it's super valuable, and it affords a small business to get further in their business with high level professionals without having to have that huge recruitment spend. So,
right. I was going to add too, you could potentially get a team of people or different levels of expertise. Sometimes, like, I'm going to pick on nonprofits again. We do work for nonprofits and small businesses, but either one, sometimes they think, well, I need to hire this position. And there's things that they need, that are higher level, but then there's also things that they need that are kind of lower level, and oftentimes it's hard to hire one person that can check the boxes for both the higher level and the lower level tasks that are required. It can be done. It's harder to find the right person that will do that. Because what I find is a lot of times the higher level person, after they've been around for a while, they don't want to do the lower level entry, that's kind of like a step down for them. But then there is a need for that higher level. So, a lot of times we'll try to work with, okay, what is the business or the nonprofit? What do they have resource wise available to them internally? We want to fill in the gaps. If they have a person that can get stuff 80% of the way done and they just need this additional 20%, well, we can do that 20%, and so I think where outsourcing can allow that for growing businesses, where are their holes at? What do they need to plug? And just being open that it doesn't have to be, you have these holes that need to be filled, but they don't all have to be filled with W-2 employees that are your full-time employees. So
yes. I agree. And there's been times where I've identified okay, you do need a full-time person in this seat, but you don't need somebody at my level. So let's get somebody more affordable, more entry level, let's say between 45,000 and 60,000 to come in and do this role. And then let me step down my contract with you. I'll get this person onboarded, and then let's step back with me. And then I'll be here at more of that oversight, executive director level, or whatever is most appropriate for the business. And so I think just for the listeners, processing through fractional services, there's tiers. I mean, it's not like there's only one option and you either have to go all in with this fractional person or not. Usually it's okay, if you're going to engage with me less and I'm just going to give strategic oversight, it's a lower level contract versus if I'm engaged with you weekly. And so just keeping your mind open to that. So we've talked a little bit about this, but talking about, you said it's not necessarily about building a budget. It's more about that plan, that business plan. What are some of the key elements that they would want to include in that business plan from a practical level?
I mean, I think just looking at kind of what they're initially thinking, even for pricing their services, does it pass the smell tests? If is this a realistic, is this feasible, I guess, or is this going to work to get what I want? And I think too, it's also helpful, I think, to think through like very strategically, like what do you want your business to be? Do you want it to be like high volume, low dollar? Like that's one kind of approach to things. Or do you want it to be, I'm going to do less volume, higher dollar? You can't be it all. So I think getting very specific with what you want your business to like represent and how are you like differentiating yourself, from your competitors, what sets you apart. So kind of talk like just roughly like thinking through if I want to be, high volume, low dollar, what does my pricing kind of need to look like for my products or services? What are my costs involved? Like how many people am I going to have to pay? What kind of, do I have to buy, machinery? Do I have to have a warehouse space? What kind of expenses are involved? And then kind of just looking at like, is this even like close to, realistic and with getting me what I want? I really see where one of two things happens. One, people don't even think about it and they just are like, I have this great idea, but they haven't really thought through like the logistics and like what all is going to involve to put into it. The other is they put into it, but it's like it's not realistic with their numbers, for what they have. So just try to almost be like realistic. And does this pass the smell test? Like, is this like sound too good to, do the numbers seem too good to be true? Or is this, realistic? And then also thinking through, when I started out, it was just me. And there was a time when I had to question, am I like building a business or am I a consultant? And either of those are fine, but to know like, one road would have been, I'm more of a consultant. Like I don't want to grow. I just want the flexibility to work from home and I don't want to have responsibility for other employees. I don't want to have office space. Like I just want to have the flexibility and be able to kind of make a living. That's one path. Building a business and kind of building a brand is a different path. So not that you have to have that figured out right away, but it could be helpful because there is things that involve when you start a business, like with the name of your business and how you brand, like, what does your logo look like? What is your brand color? All of that. It's helpful, I think, to try to think through early on in the process and just try to be thankful. Like early on, I was like, well, I could be Rebecca Knipp CPA just by myself. But I knew I didn't want to like limit myself. Like I knew I wanted to own a business and I wanted to grow it and I didn't want it just to be me. And so I think like really thinking through like, how do I get to that point and what is our goal? And, I think early on, like you have these ideas of what you want to do. And then sometimes you make the mistake of not, you're actually more broad than what you should be. So I think even getting very specific and having a vision for what exactly you want the business to be and like all of your decisions should almost be, aligned with that very concise vision. So the more that your business kind of grows into, maturity, probably the easier it is to kind of develop that vision and be like, okay, this doesn't fit, and I need to pivot. Like maybe early on I would have accepted this prospect, but it's not a good fit for what we're trying to do. So that business plan, like in my mind, it should include the financial pieces, like pricing, kind of what am I going to try to charge for my product or my service and what all expenses do I have, but also kind of include like, what is the ultimate like goal? Like how am I setting how is this business different than other things that are already out there and kind of defining that. So even coming up with like a 5-minute elevator speech, not even 5 minutes, like a minute elevator speech, like when you meet a stranger, like how would you describe how your business is different than what is already out there? So
yeah, that's good. It makes me think of before I started my business, the year before, I was thinking about starting it. And so I had put together an email and sent it out to about 15 or 20 people that I respected in the business community. And I was like, hey, here's what I'm going to be doing. And I laid it out. It was kind of a lengthy email. And I was like, please let me know what your thoughts are. What I really meant was, let me know if your business would spend money on this. And I got so many like, good job. I'm happy for you. You're going to be so great. But I didn't get one single person that was like, and I would pay for this service. And it really made me sit back on my heels because I thought, I'm going to put this out there and at least 1 to 5 of these people are going to be like, I need that. So it made me sit back and reflect. I ended up taking another corporate role. And then within 6 months, I was like, shoot, I meant to start my own business. I still want to do that. That's still a goal of my heart. I must not have been communicating effectively. To your point about the elevator pitch, I was like, okay, I didn't put that out there. I wasn't clear. I didn't explain how someone could do business with me. So I'm going to try this again. And I just threw out a couple minute message on social media and was like, this is what I'm doing. This is why I'm qualified to do this. And my books filled for the remainder of the year. And so really refining that message and giving yourself a chance to get it out there and continue to niche down. I know a lot of people want to be broad, and especially if you're a multi-passionate entrepreneur and you could be a lot of different things to a lot of different people, but then people don't know what they should pay you for. And so really getting clear on that messaging is huge. So let's kind of shift gears to the more boring side of life, but super vital. And I do have an attorney that I work with that gives me advice on my business. So what are some of the essential legal and regulatory considerations that entrepreneurs should be aware of when they start a new business? And how can they ensure compliance while minimizing cost?
So I think, first of all, just be aware of your registration requirements. So you mentioned having a lawyer. That is number one. I know people can go on LegalZoom or do it themselves, but having, a person that's trained in that field, it's not that much to set up an LLC. And I think it goes a long way to ensuring that you have a person that's an expert in that field kind of guiding you. So first, LLCs, and I guess I should take a step back. So LLC is a legal entity. I'm sure most everyone listening to this podcast has heard of that. It's not a tax entity. You can choose how you want it to be taxed. But LLCs are very popular because it adds an added layer of legal protection. So anyone that's starting out or potentially starting out a business, I would recommend they set up an LLC. Even if they don't go forward with it, if they have that as an option, it's good to get the groundwork started. So to do that, I would recommend going to, a lawyer to get that set up. Once that LLC is established, you would then want to register to get what's called an EIN, which is the business identification number. And that kind of puts the business into it kind of registers it in a way with the IRS. But then the next phase is registering with whatever state you're in. We're in Missouri, so there's another registration that needs to happen with Missouri where you get a Missouri ID number. There's payroll tax registration requirements, different depending, there's different registration forms for different taxes that you have to withhold. There's also sales tax registration requirements. So sales tax is if you're selling tangible products, you should be charging sales tax to your customers and then collecting that and sending it to the government, kind of a middleman. So if you are a service-based business with labor, where you're selling your labor, that does not necessarily need sales tax charge. But just being aware of what some of these different taxes are and when you need to register, because you don't want to make a mistake and not register and then have this big tax bill because you didn't properly collect the sales tax or charge the payroll tax. So, and there's a big thing, I'm getting really into the accounting weeds, but there's a big thing, especially for businesses that are selling, products over the internet. Be mindful, you may have registration requirements in some other states, as the more volume that you have in those other states, you may have registration requirements there. I've seen, especially with COVID where people were working from home, if you have employees that are in other states that are working remotely, just be aware, you probably could be opening up registration needs in those states where you have remote workers. So I think, as far as just try to stay on the up and up of what the registrations that you have to do. in addition to like those registrations and taxes, I think that just addressing like what kind of IT and security issues do you have? Like, and are there any other kind of just legal type things? And this is where having an attorney can be helpful to like just kick, ideas off of. The problem with a lot of this, especially with like the state registrations, a lot of times there's not just one overall guide or manual. Every state is different. And in fact, there are some different registrations required in certain localities. So like St. Louis and Kansas City each have like a tax that they charge. And so unfortunately, there's not this like one place where you can search like, what do I need to do? You have to almost look at each individual state or locality to figure out what are their requirements and, do I have a need to register there? And so that can take time to research. It's not, anyone can do it, but it just takes time to like dig in through the states. But it's not an area that I would recommend skimping on because the states are not going to like it if you're supposed to register and you don't, and they're not getting like their tax dollars. So mainly just, being aware and thinking through long and hard, like what is the product that I'm selling? Like who do I have employees? What kind of situation am I in? And making sure we're researching, like, are there registration requirements for any of those things? So
how did people do it before Google? I just want to say.
Well, they didn't have it. So the problem was like back in the day in Missouri, for instance, like you just had a storefront. And so it was actually much simpler. Like you just charged your tax of where your store was. There's actually this is nerdy, there's a big case. It was actually with Wayfair that kind of turned the sales tax world on its head. So that was when, way back in the day, like early on Amazon, you could get stuff and you wouldn't necessarily have sales tax charged on it because they didn't have those requirements. But they've since kind of changed that. And I would love it if they would make it a little bit more streamlined, like if the states would somehow come together and have more of so that these people aren't, because the smaller the business, the more hard it is to stay on top of those regulations and be in compliance. So,
yeah, it kind of sounds overwhelming. That's why you need a partner to come along. So this has been super helpful. Is there anything else that you'd like to mention to the listeners before we wrap?
No, I just want to thank you for the opportunity. Like I said, I own Optimized CFO and Controller Services. We call it Optimized CFO for short. If you do need help, we're fans of being communicators, not just generating the numbers, but using them to make decisions, using them to, communicate what's going to be coming in the future. And so if you do need any help, you can find us at optimizedcfo.com. And I just want to thank you again and your listeners. I've enjoyed listening myself to this podcast, so it's a privilege to be here.
Awesome. And I will make sure to link Rebecca's website in the show notes. Folks, many of us know less about our business finances than we'd like to admit. It's normal, but it's scary as understanding our money has a direct correlation to business sustainability for both you and your employees if you have them. Making the decisions to do better in this area can feel like chaos. Don't shy away from it. Jump in and find a partner who will walk through this journey with you. So embrace the chaos and soon you'll begin to thrive in it. Until next time.